The Reserve Bank says while there is some uncertainty, inflation is under control and likely to remain below 4% until the middle of next year. Thereafter, it's expected to edge higher in the latter part of next year, but remaining within the 3 to 6% target range. Upside risks to inflation include higher prices of food, electricity and water, as well as insurance premiums and wage settlements.
The MPC decided to reduce the policy rate by 25 basis points to 7.75% with effect from the 22nd of November 2024. The decision was unanimous. The committee agreed that reducing the level of policy restrictiveness is still consistent with achieving the inflation target. The risk outlook, however, requires a cautious approach.
The recent cut in interest rates will see those with debt paying a little less on their monthly premiums. For those paying off a mortgage of R1 million over a 20-year period, there will be a saving of just below R200. While the central bank stresses that each decision is data dependent, its forecast model sees rates easing further in the future, stabilizing a bit above 7%, meaning there won't be too many cuts as uncertainty prevails.
The Reserve Bank's decision to cut the repo rate by a 0.25 percentage point was exactly in line with our forecast. We have maintained throughout this cycle that the Reserve Bank will likely cut interest rates very gradually. That's partly because we envisage only a shallow cycle of a cumulative 1 percentage point, of which we've now had half, and it is partly because the Reserve Bank remains very cognizant of the remaining inflation risks. These emanate both from the domestic economy and, of course, from a very fragile and uncertain global economy.
The central bank sees the economy doing better going forward, following a weak economic performance through 2023 and the first half of this year. It's expected to benefit from the lower inflation, higher disposable income, and extra spending from pension withdrawals under the new two-pot system. Better growth is also dependent on continued structural reforms to support the economy's growth capacity. Gloria Sefakomusi, SABC News, Johannesburg.